Welcome to today's market report. European stock markets traded higher on Friday, with investors looking beyond record death from COVID-19 and US political turmoil and pricing in a strong economic recovery in the second half of the year. DAX in Germany traded 1% higher, climbing to a record high. CAC 40 in France rose 0.7%, FTSE 100 climbed 0.2%. Wall Street also hit record highs on Thursday, and European markets benefited from this increased confidence. Investors are looking to the incoming Democratic-controlled US government for an additional fiscal spending, while European economies are also set to get a boost from the European Recovery Fund. With this in mind, investors are prepared to overlook the rising number of COVID-19 cases. Germany recorded the most fatalities since the pandemic started, the associated national lockdowns throughout Europe, and the hesitant to the vaccination program. The US also notched over 4,000 deaths in a single day for the first time. Helping was a new study that indicated that Pfizer-BioNTech vaccine is also effective against the new virulent strains of the virus found primarily in the UK and South Africa. Additionally, late Thursday, President Donald Trump finally conceded that President-elect Joe Biden would take control of the White House later this month, for the first time condemning the violence that broke out on Wednesday when his supporters stormed the US Capitol while lawmakers were confirming Biden's election victory. Turning to economic data, German industrial production rose 0.9% in November, ahead of expectations, but the key economic release will be the December US non-farm payrolls number after Wednesday's ADP release suggested the country's job recovery had ended. In corporate news, Credit Suisse stock fell 1.6% after the Swiss banking giant said it expects to book a net loss for its fourth quarter after increasing its provisions for a long-running legal dispute in the United States by $850 million. On a brighter note, STMicroelectronics NV stock rose 4.1% after the chipmaker offered an early revenue estimate for the fourth quarter above the previous range. Oil prices edged higher on Friday, continuing the bullish tone created by Saudi Arabia's surprise announcement earlier this week that it would voluntarily cut output by 1 million barrels per day for the next 2 months. Crude traded 0.8% higher at $51.22 per barrel. Brent contract rose 0.8% to $54.86 per barrel. Both benchmarks are on track to post gains of around 5% this week and are trading around the highest levels since February last year. Gold futures fell 1.2% to $1,890.50 per ounce. On the FX front, GBP/USD holds at higher levels as the bulls look to regain the 136 level despite broad-based US dollar strength and negative Brexit headlines. The cable stands resilient to the persistent upbeat mood around the US dollar as the weakness in the euro-sterling cross lends support to the pound. This comes on the back of a 0.35% drop in euro-dollar amid firming US Treasury yields. Further, the GBP bulls also remain unperturbed by fresh Brexit concerns, especially on the news that the Scottish fishermen halted their exports to the European Union over days-long delays due to post-Brexit bureaucracy. Extremely high infections mean hospital capacity is diminishing fast. Although vaccination rollouts are faster, the hit to economic growth is likely to be the most severe in the UK, and economists at MUFG Bank now expect the Bank of England to cut rates into negative territory at its next meeting on 4th of February. GBP will therefore underperform this year. The UK-EU Brexit trading deal is bare bones in substance, with potential flashpoints over the next few years. The deal is likely to be augmented over time, with financial services and data the focus for 2021, while reviews and disputes could still lead to the deal collapsing at some point further down the line, according to economists at Standard Chartered. Modest divergence is likely over the medium term, but possible reconvergence over the long term. The past year has seen a range of over 2,000 pips in GBP USD, as well as how markets respond and lessons to take forward. Euro-dollar is down for the second session in a row on Friday, although it has managed to regain some composure following earlier multi-day lows near the key support at 122 the figure. The recent pickup in the US yields has been collaborating with the better note surrounding the greenback. The dollar index was at 89.81, bouncing off a near 3-year low. This is today's market news. Thanks for listening. We'll see you next time.